Hi, I am Anna. I come from www.ntvforex.com. Asia update. Is it time to buy the dip again? Analysis. http ntvforex.com news ID 163963 2024 51:07 am. Markets. US equities were weaker. NBSP Monday. The S&P down 0.2% as a month-end inspired profit-taking triggered a consolidation pullback after 7 consecutive days of gains. European stocks were also more fragile, as was Asia. However, Japan was an exception due to the buffet bounce. Intraday recovery propensity and cash on the sidelines remain healthy, and with Fed Clarida reaffirming that U.S. interest rates will stay low for longer, suggesting systematic risks remain low and cash level remains high, most sell-offs lately have proven to buy the dip opportunity. So, with month-end rebalancing-driven weakness so far coming in on the softer side of a potentially expected 1% to 4% sell-off on the back of $80 billion of pension month-end equity selling, the month-end slide could augur well as that buy the dip opportunity to establish long equities and short volatility positions. NBSP still, there could be some more residual rebalancing effects, while investors might be a little defensive about jumping in without cause ahead of this week's NFP. A breakthrough on the U.S. stimulus snaggle could be a timely event this week. NBSP fiscal cliff edge concerns could be leaking into discussions again, with Secretary of State Stephen Mnuchin telling Fox News the Democrats do not want to negotiate in good faith. Not only is ambivalence hurting the nascent economic recovery, but more importantly, it keeps the neediest checking their mailboxes regularly while praying a second stimulus check miraculously arrived. We're talking about people needing to buy groceries here, not luxury items, and it's time for Congress to get off their derrieres and put something actionable together. NBSP Fed Vice Chair Richard Clarida paints a picture of the Fed being set for the moment in terms of policy innovation now that the AVE revised the framework with enhanced forward guidance. They want to consider yield curve control unless things change, and negative rates are not an attractive option for the U.S. The question now is whether the September 15, 16 FOMC meeting will yield any further concrete steps to implement the revised framework. Fed Vice Chair Clarida, towards the end of the discussion on Monday, did suggest that discussing strengthened forward guidance was the natural next step. But, as Dallas Fed President Robert Kaplan noted over the weekend, there is little reason to hurry, and it might be early enough if the decision on forwarding guidance comes by year-end. On the surface, and when taken in the context from the latest minutes, it suggests discussions are not far enough along, so September might be a bit too early for the great Fed policy framework unveil. And for airlines, October 1 is an important date. Under the terms of the CARES Act, which provided up to $50 billion of help to the U.S. airline industry, airlines could not lay off or involuntarily furlough staff until then. As the date draws nearer, airlines are already preparing for massive job cuts, with markets estimating about 400,000 airline workers have been fired, furloughed, or told they might lose their jobs. Gold. NBSP Gold remained supported overnight by a dip in U.S. yields amid the backdrop of a weaker U.S. dollar, while prices had only a modest reaction to Fed Vice Chair Clarida's speech on monetary policy. Still, the future looks glittering for gold as the fundamental bullish factors continue falling into place beyond 2021, as the Fed will remain mute to lower unemployment levels or higher inflation. Hence there is tremendous potential for broad-based dollar weakness and higher gold prices into 2022, suggesting we'll be talking gold up for an exceptionally long time. NBSP and given a chance, even if remote at this stage, the game-changer tail risk of an inflationary explosion higher over the next 2 or 3 years when the Fed is widely expected to sit pat, gold then starts to sound like an excellent place to hang out for a few years provided real rates remain anchored lower, which is bound to happen on any reflationary bounce. NBSP Forex. NBSP The currency market remains in a holding pattern ahead of Friday's NFP, and Forex traders are caught in the short-term versus long-term vortex. In the U.S. market, higher bond yields and short-term market risk premia are not sufficiently priced, considering positive vaccine news, the recovery momentum and net issuance in September. Still, many investors are deferring to a medium-term slowing in the pace of growth improvement and U.S. election uncertainty coming into keen focus as the reason to own gold and remain short the dollar. NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.